Welcome to this introductory video on trading earnings events. I'm the earnings bookie, and in this short presentation we're going to look at exactly what it is that we do that's different from everybody else as far as trying to find out how best to trade stocks around their earnings announcement season. Take a look at this. This is my earnings confused, because I'm always confused by earnings announcements. You get this beat or miss the street estimates on revenue and earnings. I mean, what does that mean? How do I gauge that to trade a stock? I mean, how much did they miss or beat? How significant is that? What's their guidance? I mean, is that good guidance, bad guidance? I don't know. How the heck do you trade that? It's not too surprising that many traders I've known over the years avoid earnings trading completely. So here's an interesting announcement. This is from Jabil Circuits. This is in June the 24th. It's an example for you. I mean, how do you trade all of this numbers and information? You know, Q3 revenues above the consensus, core earnings ahead of expectations, and then you've got the revenue expectation for the next quarter versus what the street expectation, and then you've got the fiscal year '08, the total revenue versus the street view. Just too much information. What we do is we discard all this information and we look purely at earnings reaction. What is the reaction of the stock to the earnings announcement? And we call this earnings analytics. So what is earnings analytics? Well, it's the science of taking fundamental data and turning it into a rational technical study. I'm from a technical analysis background. If you trade stocks, you know about stocks, and you know that technical analysis looks at numbers, historical action. We use mathematical formulas and algorithms to derive information that we can use to try and see what's going to happen to a stock in the future. Well, we've taken what happens with earnings, which is basically fundamental information, removed the emotion, and given ourselves a rational study. So how do we do this? Well, we analyze the post and pre-market reaction going back to 2002. So we're looking at after hours and pre-market the next day, and then we look at the follow-through into the day after the earnings announcement. That's the regular trading day. We don't care what the reports say, we only care what the reaction is. This is the core of what we do. And this is what gives us our edge. We throw away all that emotion and we just look at how does a stock react to its earnings. So down the bottom here you've got an example from one of our spreadsheets that just shows you earnings reaction. Don't worry about that picture there. We'll present this in a way where you'll be able to see exactly how this works. So what are the advantages of earning analytics? Well, not every stock performs consistently. Earning analytics allows us to identify the best trading opportunities. We discard the ones that don't perform in a consistent manner, and we just focus on the ones that have a history of performing in a consistent manner. And it's worth noting down here, consistent earnings plays are often independent of what the market is doing. It doesn't matter if the market might go up 300 points on a Dow in the morning. A consistent earnings player may go in completely the opposite direction. The other point down here is if you know about long and short side of stocks, you can play both sides. Some of these earnings consistent players continually go down every single time, or the vast majority of times, and some continually go up. Some go in both directions and are consistent in both directions. What we do with earnings analytics is that we find those stocks that are consistent and then we highlight them. So how does this work? Well, certain stocks are regularly traded around these earnings events by institutions, mutual funds, hedge funds, black box trading systems. It creates a short-term demand or a short selling period for the stock. And it's almost like it's triggered every single time the earnings go on these particular stocks. Bang, bang, bang. You get the same thing happening. Okay, I've got a chart here. This is an end of day chart, so it's a price chart of the last 2 years of history on Jabil circuits. And what we do on these charts is we mark on arrows there, those big red arrows show you the earnings announcement dates. And then in the red, we have the pre-market gain loss, and that's right after the earnings announcement. And then after that, we put in blue the total gain loss, which is the follow through into the next day. Take a look at these numbers. On the far right there, most recent one, 6.7% up in after hours, right after earnings announcement. By the end of the next day, it was up 16.5%, so it continued to follow through. Look at the previous one, 12.8% down, continued to 18.3% down. Remember, this is in one day. And the previous quarter before that, minus 10.4% down, followed through into the next day, minus 21.6% down. And we'll go back to the last quarter, 4 quarters ago, minus 1.1% down, followed through to minus 6.7% down. I think you can see a consistency here, right? It continues to follow through into the next day. So we're odds-on favorite that next time this earnings announcement's come out on Jabil, there's a good chance that this stock will perform the same way. Whether it's up or down, it doesn't matter. If it's up in the after hours, then we've got a great opportunity to follow that through into the next day and make money. And the same on the downside. If it's down in after hours, it's a great opportunity to go short and follow through into the next day to make money. That's what the heart of earnings analytics is. So this is where we get our odds from. This is the full data long and short we do with our analyzing. Here's our odds here. 72.7% of the times, 8 out of 11 times, this stock followed through in the same direction by the close of the next regular session compared to extended hours effective close. When it followed through, the price closed further in the same direction on average at 4.4%. So there you go. You've got odds on favor that it's going to continue in the direction of the after hours, and we've got an average move of 4.4% in one day. I think you'll find that's very tradable. So that's the basics. That's the core of what we do. And we'll be featuring regular sessions in this YouTube area where we'll be looking at different stocks as they're coming up and analyzing stocks that have already gone by to see how effective the move was. And that ends the first session on earnings analytics.